is August 5th. It's a Monday. There's been a big drop in the Dow and this an overall market altogether, and the Nasdaq as well, and as well as my account. And I will take you through that. Furthermore, I'll talk about why there doesn't necessarily have to be a recession or a big drop in the market, and what kind of metrics I'm using to judge that, which are not very technical, and why I'm not afraid to buy at this point. Sounds like a pretty bullish view, but and I am positioned fairly bullish at least with this account. I had sold out of my market short position, and I have also sold out of my precious metals positions, except wheat and precious metals, which had a very modest gain today compared to some other silver and gold miners like EXK, for example, another position that I've cleared out altogether from this account. I do own some in a different account, but this account doesn't have any more. I've already collected the profits from that, and I've, to a large degree, collected the profits from wheat and precious metals too. I've been gaining some shares. I'll show you. When I go to the account here, it's going to be pretty bright, so my screen is probably going to drown in white light. But anyway, we'll go to the browser here, and I'll show you. I'm sitting at 58,646 right now. There's been a $2,447 drop. I've been adding a little bit to my Apple's position, and as well as I've been looking at other companies, other brands that I can buy. I had one person comment and suggest Pan American Silver as well as Square. I'm personally, I've looked at those and I'm considering them to make a large investment. I've also been looking at Visa. It is a little bit pricey at the moment, and it's had a nice drop today. And if it continues to drop, I'm thinking of picking up some shares there. But like I mentioned before, I have a really hard time getting into anything but Apple. I mean, it's just looking so great to me, and a lot of the risks are already priced in, and I think it's undervalued at this point. Like, I will concede I'm not the Apple financial guru. I've looked through their report, and I see that their financials look just fine. And I think that because they're diversifying through so many different businesses like services and different hardware businesses. They have so much going for them right now, and this I believe temporary hit on the price because of world events is going to blow over eventually. And I think that this fear is, for the most part, priced in. Maybe we'll have another 5-10% drop. It's possible, but I can't really see the market going that far down without major intervention from politicians, from powerful individuals like Powell, from central bankers around the world staving off global recessions. And the U.S. market is a little bit overpriced compared to the world markets. So if there is a correction there, that's totally fine. But I think that in the long run, especially by the end of 2020, Apple is going to be, and the overall markets are going to be higher. Like, I can't see them being lower. I am predicting a sideways real value markets for the developed world for the next 10 years. Two of them have already passed, and that prediction has been pretty strong so far because the market has gone absolutely nowhere in 2 years in a real terms. And so I expect that to continue to happen, but it doesn't mean that I can't profit from that sideways market. Like, I've made a video about sideways markets before, and I continue to profit from that. And another prediction that I made was I thought that the silver and gold market was going to break with the upside, and it is doing that right now. I don't know how much further it has to go. I did collect my gains a little bit too early from this account anyways. I just sold some Kinross for my other account. It's another mining company. So I collected some profits there, so I'm happy about that. But this account is definitely looking pretty bleak at the moment. And it's the one I care most about because it's the public one. So I want to make sure I do a good job here, even though I have made some slip ups publicly, obviously. But so what I'm doing right now is I've been accumulating. Sorry for the brightness. Been accumulating Apple shares. I'm up to 146 right now. My average entry price is 168.38, which is higher than the 165 it was earlier because I've been buying at higher prices. I bought some at 2010, some 2003, some 193. So as Apple's been dropping down, I have been buying. You can see my total shares is 146 now, almost 50% of the account. You can see how the options play is playing out, because I have two put options and one call option sells. My total return is now only $300. The two puts have gained in value, which puts me at a $800 loss today, plus the $1,650 loss. That's quite a bit. That contributes to the vast majority of the account's loss for today is due to Apple, which is okay. Which is okay because sometimes the vast majority of the gains are because of Apple too. So why am I not afraid of this big deep recession? Well, I want to use it as an opportunity to again accumulate more shares, probably more Apple, hopefully some Visa, and maybe some of the brands that you guys mentioned. Um, I just can't see central banks allowing the markets to drop that far down, especially politicians, and everybody will be out in full force trying to save this market. Nobody wants to see this bubble prick, and I'm not betting. I don't want to bet against the people who have control over the measurement units, right? The measurement units are US dollars or whatever currency that you use in your own country. Um, People who have control over the measurement units will eventually step in and affect that side of the equation, right? It's not just the value of the market, it's how you measure it, right? So if you're measuring something in meters, let's say you're 2 meters tall, if you measure it in foot, you'd be over 6 feet, right? Or I don't know exactly where it works out, but it's something like that, right? It's around 6 feet. So I I can't see a future where they don't devalue the currency in order to boost up the market, and I'm betting on that. I think that the markets will definitely have another all-time high within a year and a half. And I'm really trying to cash out in 2020. I want to accumulate as many Apple shares as I can, because one of the predictions I have, another prediction that hopefully will come true, just like the two that I just mentioned, is that Apple will have a huge technological breakthrough in 2020 in the winter. And I think the phones are just going to be absolutely crazy. And I don't have any hard evidence to confirm that. Excuse me for the shaking. I don't have any hard evidence to confirm that, but just I'm just just from getting a feel of how the company operates, how it releases products, and the timing of it, and how long it takes it to have a cell phone cycle. I'd be really disappointed if in 2020 they don't, because I'm making a really big bet on it. um, Part of the reason why I was selling puts against Apple is that I was secretly kind of hoping that the price would drop down to below $200 so I can accumulate more shares by this winter if the phones flop. And because I think the next year is going to be real strong, and I'm willing to wait another year for a big payout, and that will be 2 years of waiting for the big payout. Another reason why I'm not a firm believer here of a big recession is because people are talking about it. I mean, money managers, um, hedge fund managers, popular financial stars and anchors have been out telling the world about their bearish views and how there's such high risks, and how trade there's so many worries about trade and all this. Well, I read today that it's really gonna Apple, for example, from this 10% tariff cut, tariff on 300 billion goods from China is only gonna be hit 6% of their margin on their hardware, which is not that much in the grand scheme of things. Yes, it could escalate. It could become 25% tariffs and or higher, or who knows what's going to happen. Trade could cease altogether. But I think that's number one, an unlikely scenario. I think things are going to resolve in a positive way. And even if they don't, I think that Apple is nimble enough as a company. It's a pretty global company that it could transfer, their parts production elsewhere. And I think that the demand for the phone is going to be stronger for Apple products. Period. Is going to be stronger no matter what, even in a recession, no matter what happens. Because to me, it's like the movie theaters in the Great Depression. After you eat, the next thing you're gonna make sure you do is that you have the latest Apple gadget. That's basically how it is. I mean, I was in Thailand for a couple weeks, for like 3 weeks, but I don't count the last one because I was in the hospital. But and there was a lot of people that were seemingly poor, but they always somehow seemed to have the Apple phone. Like everybody had the Apple phone, and some of the latest ones too. But it's a lot of money for what it is over there. So people will save. People will not eat the best meals all the time just so they can save money so they can buy that gadget, right? So it's got really high desirability value around the world and in the US. We just don't appreciate it as much because for most of us, it's easily attainable, right? It's a little bit less than it's $1,000 or less, or somewhere around 1,000, maybe a little more. It can be saved. Like most workers, they will just use their tax return or something like that to buy the newest iPhone, and they'll do payments. There's a lot of financing options over here, so it's very accessible even if you don't have the money. And in other countries, it isn't like that, but people still make sure that they get that after they feed themselves and drink water, and sometimes even before food, right? They'll starve just to have the phone. And I see it kind of like the movies in the Depression, where people still spend that extra dime to go to the movies, even though things were bad and things were tough. So I can't see that. I see it, this is the products as a necessity, almost. There's a fine line between desire and necessity, but I think most people will give up a lot just so they can have their Apple products. And now we have the services and all that. So anyway, that's my rant about Apple. I don't want to talk exclusively about it, but I started talking about the markets and how I think the sentiment is pretty negative right now. I mean, I'm probably looking pretty negative too, but it's hard to see that, $2,500 drop and be super positive. But I will not be scared if there's another, $10,000 drop. I'll just use it as an opportunity to accumulate more. I still have 5,000. I sold out of the short term treasuries, and I've invested them into things like Apple and other funds in my account, just little tiny positions. And I still have $5,000 of emerging market bonds that I can use. And I will not be buying XK with it since I already cashed out, and XK is not undervalued. Well, it might be undervalued considered current silver prices, but it's not depressed at the moment, so I don't want to put money into it. But I'm certainly willing to put money in Apple. It's quite a bit off the highs right now. It's $40 off its highs. I don't know how many percent, nearly 20% off of the all-time highs, which was a year ago. I forgot when they made the highs, but almost a year ago maybe. Before that 2018 winter drop. So I might put all that $5,000 into Apple. I don't know. We'll see how it goes, or maybe other good brands. But I'm pretty bullish. I want to accumulate a really large position so it pays off by 2020. It's another prediction I'm making. So far, my predictions are good, and my account should be looking a lot better than it is for all the good predictions I've made. But you know, as far as my prediction on silver and gold, I think it's probably gonna have an intermediate top around here or at 1550 gold is. And silver, I'd already mentioned like on a few episodes how I think the top will, intermediate top. I mean intermediate meaning like 6 months to a year and a half. Um, Intermediate top will be somewhere around $18 at the most. If it busts through 18, I'll be happy. I have some silver miners, but I just don't think that will happen. I think things will start stabilizing and people will start shifting some of their gold position away into undervalued U.S. assets and global assets. All right, so what was I going to show you here? Oh, Chemicals also had a big hit. I didn't take you through the account. Chemical had a big hit. I sold another put here. Accumulated 100 shares, extra 100 shares, and but it's doing good. It broke through that resistance on the downside, but I can't. It's a really stable company, and I can't see it go down too much further than its October 14th low here in 2016. But of course, we'll see. I might be wrong about that one, and it could continue to drop. Okay, I think that's about it. Um, Negative sentiments too negative in my opinion for this drop to last too much longer. We'll see if I'm right about that. Maybe another 3 to 5% at the most. If it's more, everybody will be up in arms, and the market will reverse even faster to the upside. So let's see what happens. All right, I think that's it for now. Probably make another recording on Tuesday night, maybe tomorrow night. So I'm looking forward to see what the market brings. All right, I think that's it for now. Peace out.